the Nifty Bank as well. You're with us here on a fresh new edition of Closing Bell. I'm Prashant. With me, my colleague Rima. Nigel, of course, joins us from the newsroom floor. Guys, hi, afternoon.
Afternoon.
100 points now, right? So things are looking pretty good, 90 points to be precise. But slowly but surely, the markets moved up to the high point of the day. The high was made right at the open, after the open, and then the market did nothing for the next many hours. And towards 2:30, actually 2:15 or so, we moved back to the opening highs, and then we are above the opening highs as well. So these are fresh levels to watch out for. As I said, HDFC Twins are the big contributors. Nifty Bank is up 0.5% the last I checked. The one level on the Nifty to watch out for, and this we put out in the morning as well, is 18,795, which we are, actually almost there. So we are at just 10 points short of that level. 18,783 is where we are at. This is nothing but the retracement from the recent high on the 22nd of June to the low which was made yesterday. This is a short 2-3 day pullback. The 61.8% retracement is 18,795. And that's a very near-term resistance. The big one, of course, is the all-time high, which is another 80-90 points from that level. For the Nifty Bank, the recent high of 44,042 will be eyed for further upsides to get confirmed. But this is a pretty good-looking screen all around, I have to say. Market breadth is pretty positive, but I think 1.5:1 on the NSE. Rima.
Well, it's all thanks to the HDFC Twins, right? 2% gain now on HDFC Bank and HDFC Limited. And today, remember, you also have the Fin Nifty expiry, and the expiry for the June series is tomorrow and not on Thursday, as people had earlier planned for. So it's a combination of factors. The fact that finally we are now in the last leg of the merger between the two, and you've got the Fin Nifty expiry, and that's pushed up these stocks because the rest of the heavyweight banking stocks are not contributing. Pull up an ICICI Bank, that's only up 0.1%. A State Bank of India is up 0.12%. So the up move that we're seeing in the Nifty Bank is courtesy the HDFC Twins. And if perhaps the rest of the banking pack contributes now, you could see the Nifty Bank making a dash towards that 44,000 mark. We're currently just about 50 points away from that level. In the F&O space, you've got a lot of individual movers. These were rank outperformers, but over the last 2-3 days, they had consolidated, lost a bit of ground. But once again, Aditya Birla Capital now up 5.5%. HDFC Life, what a big move that's seen. That's up nearly 5%. Canfin Homes, PFC, L&T Finance Holding, Metropolis. These were all stocks which have seen a rally of 10 to 15% in this month. These stocks corrected a bit towards the end of last week. But again, they've started outperforming a fair bit. So Nigel, all in all, looking pretty good now.
I'll tell you what, actually there are a couple of important details that are coming in from what the management had to say. Mr. Deepak Parekh, he said that the HDFC shares will go off market effective July 13th. So either it's July 13th or 17th, I think that's the broad indication that we're getting from out there. So that in turn would be a record date. We are waiting for both these two merged entities to come about. So he's saying the HDFC Limited shares will go off the market. So in all probability, well, logically, the record date will be a little before that. And that's why you're seeing that the markets are reacting. Just pull up the Nifty Financial Services Index as well as the Nifty. And the Nifty Financial Services Index is now breaking out. It's moved to the high point of the day as we speak. A couple of reasons out there. The Nifty Bank, yes, HDFC Bank has a big weightage out there. But on the Nifty Financial Services Index, you have HDFC Limited that has 18% weight on that particular index. Not just that, you have HDFC AMC as well as HDFC Life, that both of them are spiking up. And they have close to around 2% weightage on the Nifty Financial Services Index. So because of the high weightage of HDFC Limited on the Nifty Financial Services Index, it seems the Nifty Financial Services Index is now moving up. And keep in mind, in the near term, that's still the record date, you may see a mild outperformance of HDFC Limited in comparison to HDFC Bank. Because going by the merger ratio, well, it's favorable if you want to buy the twins, you rather buy HDFC Limited, because still there's a 1% gain, a benefit if you buy HDFC Limited in comparison to HDFC Bank. So that explains why the markets have moved to the high point of the day. A perfect day for the Nifty Financial Services Index as well, because that has a great amount of HDFC in it. And that's moved to the high point of the day. And now those levels that we were tracking earlier today in terms of resistance levels, well, they have been broken out. Can the Nifty Financial Services end at the high point of the day? That'll be very, very good news fired up by the HDFC Twins. Prashant?
Okay, well, more on HDFC Bank in a bit, and lots of details there coming through. Well, how should you position yourself in the last hour of trade? That's the question. Mitesh is with us with exactly that. Mitesh, good to have you with us here. Thanks very much. Just a quick word on the index, which has moved up very sharply to the day's high. And what would you do on the Nifty and stocks as well?
Good afternoon, Prashant. I think a couple of observations. One, I think the shifting of expiry. I was expecting that as we hit the expiry, we'll get some directional bias. I think the shifting of expiry means that it happens tomorrow. And therefore, I think some kind of movement has started. Nigel was highlighting the Fin Nifty index, the financial Nifty. I think that's looking very strong. And the Bank Nifty is also on the verge of giving some kind of a breakout. If we see the Bank Nifty, start getting past levels of 44,000, 44,050. So we are practically there. I think if that breaks out, then I think we should see Nifty gain more momentum. For the timing on the index, I think long positions can be taken with a stop at about 18,730. So you have a 50-point stop and a target of around 18,880 to begin with. But I suspect if the Bank Nifty joins the party, then I think we'll revise the target to about 19,000 plus. Having said that, I have two financial names on the buy list. Canfin Home is a buy with a stop at about levels of 762 for targets of 800. And RBL Bank is the other one. That's a buy with a stop at about 169 for targets of 180.
Thank you for that. Let's talk about some more stocks. PFC is on our radar. The stock is higher in trade. There is a fresh Elara Capital note. Abhishek is here with the details on that. Abhishek.
Well, as you mentioned, Elara has written on PFC with a buy target and a target price of 326 per share. The headline of the report is Power Juggernaut on roll. So they believe that, PFC can see its loan book grow by almost 50% over the next 3 years or by FY26. So macroeconomic stability, sizable power sector capex, increasing government thrust on power reforms as well as the strengthening of balance sheet will augur well for the growth ahead. So a planned power capex is expected to create a financing opportunity of about 98,000 crore by FY30 from 60,000 crore that is there in FY23, which is a CAGR of 7%. This will translate into 15% annual growth rate for PFC over the next 5 years. So PFC's loan composition is correlated with Government of India's initiatives, distribution as well as the renewable space that is coming up. So expect gross NPA to improve by 40 basis points over the next 1 year. Net interest margin will sustain at 3.7%. They expect ROE of 17% and ROA of 2.8% between FY23 to 25. This, along with the fact that credit costs will be around 12 to 18 basis points between FY23 to 25. Back to you.
Okay, all right, Abhishek, thanks a lot for that. Well, let's also look at REC. The stock has gained more than 30% in this year so far, and the company will be providing close to around 3,000 crores financial assistance to Bangalore Metro Rail Corporation for their Phase 2 project. Earlier today, we had the company's chairman and MD of the company. He joined in. He gave us a guidance in terms of AUM growth, how they see the NIM shape up, as well as how do they see their loan book as well move ahead. Let's hear him out.
Last year, our net interest margin was about 3.38%, which is quite good as per industry standard. But however, 1/3 of our borrowings are at market floating interest rate. And as you are aware, the last year, this interest had gone up. That's why our net interest margin were affected. But going forward, now we expect that borrowing cost will go down and our net interest margin will improve. With regard to our asset under management, our total outstanding loan as on 31st March 2023 was about 4,35,000 crore, which was a significant improvement of 13% on year-on-year basis over the last year. And going forward, we are targeting to take up infrastructure projects as well as energy transition initiatives. And in the next 7 years, by the year 2030, we are targeting that our loan book will increase to about 10 lakh crore. In FY24, we are targeting that it will at least touch 4,80,000 crore.
Okay, all right. Well, that was the management of REC. Well, Deepan Mehta is standing by. He's going to give us his view on REC. But Deepan, before that, I just wanted to focus on HDFC. We're getting indications that in the next couple of weeks, HDFC Limited will cease to trade on the exchanges. This has some implications. So I just want to tell my director to pull up a few stocks out here. in the near term, HDFC Limited will outperform HDFC Bank, going by the merger ratio. So HDFC Limited is a stock you should be looking at along with HDFC Bank. Next, they have been indicating that they're going to go ahead and hike that stake in HDFC Life. That's already out. So that will have to happen in the coming days. So that's why you have HDFC Life as well that's moved to the high point of the day. And thirdly, if this merger is going to take place, then HDFC Limited will cease to be part of the Nifty. So that will come out, and in all probability, just going by various brokerage notes and various analysis that have been coming in, LTI Mindtree could be a stock that could be made part of the Nifty. So that's why that stock as well has spiked to the high point of the day. So LTI Mindtree stands a good chance to come in pace of HDFC Limited, going by the numbers, going by the criteria that's laid out, and that explains why that's darting away as we speak. Well, Deepan, before we talk about REC, just want to ask you your view on HDFC Bank. Now, effectively, in the next 2 weeks or so, HDFC Limited will cease to trade. How do you approach the twins from here on? Do you believe their time has come, or will you prefer other banks?
Good afternoon, Nigel, and thank you for having me on your show. No, I think it's a very important development in the market, this entire merger. And we have two great wealth creators being merged to create a much stronger entity. And I hope that they're able to sustain the growth rates. In terms of valuation, they are at attractive levels, and there's scope for the price to earnings, price to book to expand a little bit once these uncertainties are out of the way, maybe around the time they announce their first quarter merged numbers. But I think it's a very important event in the banking history of India. And the kind of bank which gets created, the strength, the balance sheet, I think it will be able to do a lot of value creation going forward as well. My sense is that, it doesn't, you can, if you want to enter the stock, of course, buying HDFC is the better way because at a slight discount. But, selling HDFC Bank and buying HDFC, that's not workable because you end up paying capital gains tax on the sale of HDFC Limited shares. So HDFC Bank Limited shares. So from that point of view, I think the selling one stock and buying the other may not make absolute economic sense. But certainly for fresh positions, you could look at HDFC. Right. Valuations are more or less the same levels.
All right. That was the point, Deepan. In terms of selling one and buying the other wouldn't make sense, as you said. But if you're looking at them, then obviously, HDFC would be a better choice in comparison to HDFC Bank, going by the merger ratio. But Deepan, we also played out a bite of REC, and they are talking about the AUM going from around 4.35 lakh to around 10 lakh crore. Now, valuation-wise, it trades less than one price to book still, even after the big run. What's your view on the stock? Sometimes you've been a little bit skeptical about these names. So would you play it or would you still avoid it?
No, I think that, it's been in the background for so long, this REC and PFC. And that's because, we all know the story. They lend to the mainly to the PSUs or the governments. From that point of view, their NPAs are low. At the same time, they have access to a lot of resources because of the PSU stamp. Immediately, they're able to raise resources at lower rate. There was a time they could issue bonds which were tax-free as well. So, there's nothing wrong in the business model or the dynamics. It's just the track record, which kind of is a bit disturbing because they've been around for a long, long time. And there's great demand for financing of power projects, infrastructure projects, and they have this advantage of being a PSU. Yet, when you look at the track record of the company compared with the PSU bank of recent times or State Bank for that matter, then the performance has not been that interesting, but it can always change going forward. And there's a good degree of margin of safety in both these companies. So I'm inclined to have a positive view on both PFC as well as REC.
Got that. And of course, the PFC, I think, owns about some 60%, right, in REC. So that's the that's the other one. But interesting comments from the management of REC today. Deepan, hi, good afternoon. So the rally is unhurt and continues in a pretty nice fashion after a bit of a lull on Thursday, Friday, etc. Any thoughts on names like AB Capital, where there's, of course, the QIP? The stock's doubled basically over the last 1 year or so, and it's up another 6% right now. Any thoughts?
I think generally it had underperformed the other peer group NBFCs per se, and it's a pretty well managed company from that point of view. I think the NBFC never got into a major NPA issue also post ILFS crisis. It's a conservative lender, which is what we like. But there's a lot of value also being in the stock from its subsidiary companies. So from that point of view, you need to remove that value of the subsidiary company because that will not get unlocked. So I think that given the momentum which is there in the banking sector and the NBFC space and stronger NBFCs be able to raise resources more easily, I think AB Capital also should do pretty well going forward. But it's just that preferences for companies like maybe a Bajaj Finance or Chola or maybe even the MFIs, where we think the growth rates will be higher than AB Capital. And of course, they're more expensive, but we prefer those growth stocks over AB Capital.
We'll talk more about AB Capital. Abhishek will also join in. But Dipan, do stay on. We need to slip into a very short break. We'll come back, continue our conversation, and also invite Vinay Jaisingh of JM. Welcome back. You're still tuned in to Closing Bell. It's the large caps which are now outperforming the mid caps. So they've stolen a march over the broader markets, courtesy HDFC Bank and HDFC Limited. The Nifty Bank is outperforming on account of that, with the gain of close to about 300 points. One of the big movers today is Aditya Birla Capital. The company has floated a QIP. Abhishek joins in with the details. Abhishek.
Well, Rima, as you mentioned, the company has floated a QIP of about rupees 1,750 crores. The floor price is at rupees 176 rupees per share, which is at a discount to about 3% to yesterday's closing price. However, right now the stock is at 52-week high. So the proceeds of the QIP will be used for meeting capitalization of the company and its various arms, that is insurance or mutual fund, etc. Management change has been seen in Aditya Birla Capital. So Vishakha became the CEO since 1st of June 2022. Over the last 1 year, the stock has performed really well by about 104%. Financial performance post the management change, if you see on a PBT basis, that is profit before tax basis, NBFC business has done well in FY23. Housing finance business has done well, and even general broking business has done well. The losses have reduced in the health insurance business and mutual fund business. That's the only weak point that they have seen in FY23 versus 22. So in terms of return on equity, it's expanded by almost 120 basis point over the last 1 year. FY23, the return on equity is around 11.5% when compared to 10.3% on a year-on-year basis. So the process of improvement started in FY21 itself, and the NBFC and housing finance business growth that you're seeing right now is similar to the growth that you saw in FY21 as well. Back to you.
Thank you very much for that. Dipan, we already spoke about Aditya Birla Capital, and you did say that you do prefer the other NBFCs like Bajaj Finance, even though they're far more expensive. So just an open-ended question for you then. Say in the last 1 or 2 weeks, have you bought any stock? Have you been looking at any stock very closely because valuations are attractive or there are business tailwinds?
Disclosure first that we and our clients are invested. Not last 2-3 days, but certainly I think we are adding to our positions in stocks like IDFC First Bank, Praj Industries, VA Tech, Wabag. To an extent, I think even Landmark Cars is something which is interesting. So these are the 3-4 companies which we have looked at. We have been investing in the past also, but just even at these levels, even after this up move, we are quite positive on their prospects.
Okay, all right. Dipan, HDFC Life, I think you gave us a view on HDFC Bank, but I missed the point on HDFC Life. That's up close to around 5.5%. All probability, there will be a stake increase out there. I recall on budget day, the stock was slammed down. It broke that 500 rupee mark as well, but it's bounced from there in style. Any view out there?
I think it's pretty well priced at this point of time, and certainly I think it's not that the HDFC Group will buy into it in one single day. They'll do it gradually, and it doesn't mean that it's going to improve the prospects going forward. Also, it's richly valued. I think within the insurance space, I'm quite curious about LIC. And that could be a dark horse. I'm not necessarily talking about a longer term, like 3 to 5 year time frame, but in the short term, maybe 6 months, 1 year, if the quarterly numbers come through decent and the enterprise value goes up, and mind you, it should go up because stocks are trading at all-time highs and their portfolio also run exceedingly well. So that will give them a decent bump up as far as the enterprise value is concerned. And their enterprise value, the stock is trading at a significant discount to the EV. So I think there's certainly a trading opportunity in LIC, and with the way the kind of sentiment has improved towards PSUs, and earlier we spoke about PFC and REC as well. On that count, I'm quite positive on LIC.
Any of Deepan, I don't know if you read this note. CLSA put out a note on water purification businesses. Basically, a thematic note, and they only have coverage on not many names there, but there are names like Ion Exchange. I don't know if you've tracked any of them in the past or do currently. VA Tech, Wabag. Any thoughts on this space? I mean, it's definitely there is potential and it's a long runway. But have you looked at the businesses per se?
Yeah, you're right, Prashant. I think it's a very serious issue, this water shortage, water purification, water management, and we're also looking at that very closely. Of course, missed Ion Exchange. I think it did very well, created a lot of value for shareholders. performance has come through, as also the fact that P multiples have expanded. Maybe a bit late today to buy Ion Exchange, but very positive on VA Tech Webag. We discussed it earlier, a disclosure here. And I think that kind of order book position that they are sitting on and the entire functioning of the company, which is focused on an asset-light basis, makes it quite attractive. Its operating profit margins are amongst the sort of mid double digit, which is amongst the best in the industry. And they are focused on improving the return on capital employed. And I think on the whole, I think this company looks pretty interesting. I think visibility of earnings for next 2-3 years also is decent and available at reasonable valuations.
Talking about clean water, I don't know if you read, NASA has achieved a new milestone. So for some of the astronauts who were sent on an ISS mission, International Space Station, they have managed to recover water from urine and sweat. So this is, it's actually a pretty big breakthrough for long space missions. So
how I feel about that, but
since you were on the topic of clean water, this is what happened overnight and was reported in the morning. Dipan, earnings season is almost upon us, and it's going to start with your and my favorite IT. Would you be buying any mid-cap, large-cap IT names ahead of the numbers?
No, Rima, I think let's be very careful about IT this time round. The way the news flow is coming, expect the worst as far as IT.
So would you bring down your position in any IT stock then?
That time is gone. See, the buzz to sell IT stocks is over. You just have to ride out this kind of slightly dicey period for the IT industry. And I suspect that a few mid-cap stocks also may get hit. I don't know which ones. I'm just keeping my fingers crossed. But I'm certainly not looking at bottom fishing within the IT space. See, longer term, this entire AI, chat GPT, that's going to be a great growth driver. It's going to create as big a growth driver as internet or maybe even Y2K from that point of view, as more and more applications become try and imbibe AI in them in their application. So very positive on the longer term trends for IT spends. But I think the next 2-3 quarters will be quite challenging. So let's just wait and see how it happens. And I don't want to get ahead of the curve in terms of buying these stocks.
Thanks very much, Deepan. Great speaking with you. As always, appreciate your time here on CNBC-TV18. Thanks indeed. Well, Vinay Jaising is now joining us, Managing Director, Portfolio Management Services at JM Financial. Vinay, good to have you with us here. Thank you very much for your time. So a couple of stocks, in your portfolios look interesting. From a we were just discussing water purification as a theme. VA Tech, we were just discussing that with Deepan. You own Bharat Dynamics in your portfolio. We had the management with us earlier today on the show. Just start with Bharat Dynamics. Really, I was trying to press the management on margins. What's the steady state margin going to be like? Because it's been starting FY18, FY19, from 15% all the way to 25%, down to 16, 17%. It's been a little volatile, but growth and revenue numbers, visibility, etc., looks pretty good. The management told us that revenues should basically double from where they are in FY23. So they should double by FY27. What's the call and what's the thinking, Vinay? Bharat Dynamics.
So, thank you for this question. Very clearly, we are in the same camp that defense capex is on the rise by the government. Be it missiles, be it rocket launchers, Bharat Dynamics has good products. Its order book is an impressive 6 to 7 times. It's trading at about 20-21 times 1 year forward earning with a return on equity of about 24%. What makes it even more interesting is its PAT growth. Though the top line growth may be 20 to 25%, its PAT growth is 50% plus. It has a good cash situation, so net debt is not a problem. And margins, even if they were at about 20-ish%, we are pretty happy. In the longer term, as exports grow from the current 7-8% to about 15%, I'm talking about 5 years, you'll start seeing margins inch up further. So I think exciting times for lots of defense names, but in particular, we do like Bharat Dynamics because its order book size and execution cycle is a lot smaller than the other operators.
Hi Vinay, good afternoon. Y'all have been one of those who are early into this one, but would you add at current prices or would you sit and enjoy the ride for now?
We would add Bharat Dynamics at current prices. There are other defense names which we were also early in, which we probably would sit at for now. But again, the important out here is just one. It is if your order book is good, which is 5, 6, 7 times, which means your visibility for earnings is at least for 4 to 5 years for a 20 to 25% growth. And your margins are also going to be improving for the same reason. I think that's the reason why we like this space.
Devyani International is also one of the stocks that you like. Now, the numbers have not been good. And, we were talking to one of the analysts, and they indicated that the consumer demand environment has not been very strong in April, May and June. So if anyone thought that the consumer sentiment, the demand would revive after a sluggish Q4, it hasn't, which means there could be pressure on the top line. And then today you've got news about tomato prices hitting 100 rupees. Would you be worried about names like Devyani International on account of top line and maybe margin pressure?
So, when you're saying names like Devyani, let's just talk about Devyani for a minute, because Devyani's business model is a little different from the other companies just because it's increasing its number of stores. It has about 1,250 odd stores today. And in 2 years, it's increasing its stores by 25-30% to 1,800. So if just the number of stores increase for a company in different chains, be it Kentucky Fried Chicken, be it Pizza Hut, be it Costa Coffee, what will happen is your single stores sales is also increasing. So the earnings growth of 20 to 22% on the top line and bottom line growth of about 25%, I think is a given for this company. And interestingly, this is one of those companies wherein though its PBT will grow at 25%, even its ROS is at about 25%. So, good earnings, reasonable valuation, and good return on capital employed. Devyani fits the bill for all three for us.
Vinay, we were just talking about VATech with Deepan earlier. Since you own it, you've obviously done a lot of work around it. You maybe have looked at other companies in the space like Iron Exchange, etc. Just talk to us about what the underlying theme is, and are there any risks? I mean, VATech had lots of receivables around which they had issues for years. I think out of Sri Lanka, etc. Yeah, but is that all sorted?
So the good news for VATech is a lot of its risks are sorted, and its biggest risk earlier, as you rightly put it, was working capital, which was at 90-95 days. It's down to 65 days. Our analyst tells us there's a chance it will go down to 60 days. It's today trading at 1 year forward earnings of 9-10 times. Again, sticking to our previous conversation on defense. The order book here is an impressive 13,000 crores with revenue size of 3,000. So even out here, the order book to sales is north of 4 times as compared to earlier. One big change is now you have collateral and a way to get money for VATech, which earlier was missing, and its tie-ups, because of the reason it got caught in terms of working capital in the past, it's thinking a lot more today than it ever did before. So yes, we like it, and yes, we are buying it currently.
Okay, all right. Vinay, but tell us about, you're in the minority on this one. The banking names in the financials, I don't think you're too enthused. Could you give us the rationale out there, or are there select pockets that you like from the banking and financial names? Most of the street, there's a consensus buy out there, but you have some reasons. So tell us about that.
Sure. Thanks, Nigel. So first and foremost, if I look at the earnings contribution of the banking and financial sector in the last 3 years, it has been about 30 to 35%. That was largely because there were provisions made on COVID, which went away, as a result of which the PAT growth was, between 40 to 45% for the entire sector in the last 3 years. That's soon to change to top line growth, which would be the loan book growth, which could be 15% to 17%, would lead to a profit growth of about 12 to 15% for this sector. And hence, as the contributions for the financial sector goes down from, say, 33-34% to 27-28%, as far as index contribution is concerned, we are getting a little lighter on the banking and financial sector. Having said that, we are betting a lot more on pure banks, the large banks, some public sector banks, as compared to NBFCs. So primarily contribution going down should lead to them not doing relatively well on the markets as well as a space as a whole.
Signed DLM IPO update as of 2 p.m. It's been fully subscribed on day 1 and it stands at 1.65 times. The HNI subscription stands at 1.9 times, retail is at 6.6 times. I guess QIB has not been very substantial as of now, but it's been fully subscribed. Vinay, any thoughts on IdeaForge, the drone manufacturing company with a 50% market share, or Cyan DLM, which is an electronic manufacturing services company? The spaces are both very hot. They cater to defense, aerospace, and all investors are lapping up the listed names here.
So my apologies, we haven't got compliance approval to talk to these two, but on the sector, we clearly like a space wherein you're seeing the government push manufacturing. But apart from these two names, there are other spaces also, which are listed already where you can get exposure to manufacturing, defense, rail, being one of them. So we like them a lot more. But the space, the industry, which is growing for all the names that you mentioned, is fantastic as far as earnings is concerned.
Vinay, ever thought of owning an airline, Indigo? Or you owned it?
So no thoughts of owning airlines. See, at the end of the day, for us, what's important is the commodity pricing. Crude pricing is not in our hands. And as commodity prices keep on moving up and down, today, the important point for us is when we are seeing consumption growth come in, and you can buy companies like trend companies like, as you mentioned, Devyani or, SBI cards, where you can play a consumption theme, why look at other places where you could have other risks?
Got it. Even ticket prices are out of control, right? I mean, not in our control at least. But,
you need to book a lot in advance.
A lot in advance, well in advance. Thanks very much, Vinay. Good chat. Thanks very much for joining us and running us through, a plethora of stocks that we discussed. Good to speak with you. 120 points, by the way, and I think just like that, from looking at supports and looking at markets staying down, we are now, I think we're going to start that timer once again, Rima. All-time highs.
And it's taken out that 61% retracement level that you were talking about, right? 18,790.
94 or 5 or something. And we are now, 10, 15 points above that level. So this is good going. I mean, extremely good going. 130 points higher. And let's just look at the mid-cap and small-cap indices themselves. Have they added on a little bit more? Not really. Mid-cap index is up 0.45. And I think you got the small-cap index, which anything has come off a little bit. The small-cap index is up about 0.6% as well. Market breadth is still positive, but it's not gone wild with the Nifty, which is now at the day's highest point easily. We'll take a break here. We are back. What our dealing room's talking about, D-Street Chatter with Nimesh coming up in a bit. And of course, short-term technical trading ideas with our technical expert. Stay tuned.
Well, it's a bazooka move coming in for the Nifty Financial Services Index. That's moved to the high point of the day. It's playing out the weekly expiry, and the bears, those that were writing calls on the Nifty Financial Services Index, they would get trapped on the wrong side. And that's why that's moved to the high point of the day. At the start of the show, we highlighted that the HDFC, that's 15% weightage on the Nifty Financial Services Index. It's not part of the Nifty Bank. And the Nifty Financial Services Index has made a fresh 52-week high as well. But it's that time of the day when you get an insight into D-Street Chatter. Nimesh joins us. Nimesh, what a day, right? I mean, what at the high point of the day.
Absolutely. And nobody thought this is coming, right?
Yeah.
We just saw in the last 1 hour of trade a big surge thanks to the HDFC twins. And that's helping not only the Nifty, but the Nifty Bank as well. But in terms of flows, again, it's a mixed day of trade. Not like, this is backed by large FI buying as well. Within that, I believe the buying is largely into the power PSU stocks today. So those are well bid is what I understand. So PFC, REC, NTPC, these are the stocks where there is a lot of FI interest. The broader markets continue to outperform, so that's where the big momentum continues. And within that today, I guess the NBFC stocks are doing really well. I guess for some stocks, it's news-based as well, and that's helping the stocks to move up. For example, AB Capital is buzzing on back of very strong demand in the QIP. L&T Finance for the last couple of days are buzzing in trade. I guess even there is an anticipation of a change of management. So these are a few stocks why they're buzzing within the NBFC space. I guess I've been reporting for the last many weeks now about the block deals. Maybe this is going to come to an end very soon because the cool-off period will start kick in from July 1st for the insiders. So basically the promoters and private equity or promoters, they won't be able to do the blocks and also maybe it's coming to a fag end. But again, I'll address some of them in my chatter as well into this trade.
Well, Nimesh, it's that sort of market, right? Even in the run-up to your main stocks, you're giving us a couple of them as well. Yeah. But tell us the main stocks, the 4-5 stocks that you have for us.
So the first stock on my list today is HDFC Life, and that's been a big mover in trade today. And I'll explain the reason as well. The key reason is I believe there's going to be a reverse big building in HDFC Life very soon, which means the promoter entity will buy from institutional investors and the book will be launched for the same. So that's the reason why you're seeing a big surge in HDFC Life in today's trade. So that's the first one. The second stock is Green Panel Industries. Again, buzzing in trade on huge volumes. I believe some HNI investors are quite active in this stock as well. Today there was a sector report from DAM Capital which included coverage on Green Panel as well. They have a buy rating with a target price of 470. So that's one stock which is buzzing in trade. The third stock is TD Power. Again, this is one stock which has been consolidating in a narrow range of late. But if you look at the Y2D chart, the stock has doubled in the last, say, 6-7 months. And now I believe there's going to be a large block in TD Power as well very soon. So that's something to track in TD Power. And the last stock is Piramal Enterprises. We've seen a big surge in the last, say, 1 hour of trade. The volumes were quite active in the HNI desk is what I understand. But even in Piramal Enterprises, the key to watch would be the capital allocation policy. Remember, they sold a large chunk in Shriram Finance. So the street is anticipating some move in terms of what the policy is going to be with Piramal Enterprises. So that's the reason why some bit of action in Piramal Enterprises as well in today's trade.
All right. Interesting list as always. TD Power is where, Nimesh is highlighting perhaps there will be a block. Stocks done very well. And reverse book build for HDFC Life by the promoters buying from institutions, etc. So those are a few names in focus. 135 points now, by the way, on the index. We are at 18,830. So this is stronger and stronger as we approach market closing. Just about, 15-16 minutes to go. Mitesh is with us. Mitesh, what do you have?
Prashant, earlier I had advocated buying the Nifty for targets of around 18,850, 870. Suggested if the Bank Nifty starts to participate, we might see actually higher levels. So now I think the Bank Nifty is looking strong as well. One, I think traders who want to look at Bank Nifty can take a 300-point stop loss. 43,800 is what I recommend and take a long here. I think the earlier highs of 44,450, 44,500 will be crossed, and this time we could look at 44,900 plus levels. So quite positive over there. And on the stock side, BTST on Apollo Hospital and HDFC AMC. Apollo Hospital is something which I would recommend taking a BTST with the stop just below levels of 51.20 for targets of 51.80. And HDFC AMC, that is a BTST as well. Keep the stop just below levels of 20.35 and a target of 20.90.
Okay, so the Nifty Bank could head higher to levels of 44,900 as well. That's Mitesh's call. By the way, many other stocks are now participating. Pull up a State Bank of India. That's rallied 1.6%. ICICI Bank has moved to the high point of the day. It was flat when we began, closing bell at 230, and now it's up nearly 1%. IndusInd Bank too higher. Kotak Mahindra Bank is moving up, and even companies in other sectors. So whether it's something like a Titan has managed to trim its losses. You've got a Power Grid surging. You've got a JSW Steel. So across the board, you are seeing some spikes in names. Jay Bala of cashthechaos.com is now with us on the show. Jay, 18,800 plus now and eyeing all-time high levels once again. We're about 50, 60 points away from that level. Last week, we got very close but missed it by a whisker, 1 point. Do you think this time markets can take out all-time high levels?
We might as well give it to the market. The sensex has done it. So might as well concede that it's going to make a new high. But what happens after that, that's going to be pretty more important. I don't think this market has that much steam to propel the markets much higher. It's not an expanding bull market. It's something that's, that very likely to peter out. That's the medium term. But, what the market is very clearly saying that even it can miss it by 1 point. So, until 18,887 isn't taken out, it's not a given. So be watchful. Even after that, the action is on the mid-cap names and the small-cap names. In the short term, if Nifty were to go above 18,887, I see maximum potential of about 19,350. There are a couple of options in the medium term. We'll discuss this if the Nifty were to take out the all-time high.
Okay, got that. On the Nifty Bank, Jay, good afternoon. What's the view?
Hi, Prashant. We had highlighted the Bank Nifty several weeks ago. Again, the potential for that to expand is maximum about 4,600 to 48,000. So, once again, multiple parameters out there are pointing to limiting the move rather than expanding the move. So, the SBI had actually traded below key support for the stock. So that's giving a hint that even the all-time high registered on May 30th, that might not get taken out. But let's see, But as long as the index stays above 43,300, assume the trend is up. And likewise for Nifty, as long as it stays above 18,555, assume the trend is up.
Okay, all right. Hi, Jay. Good afternoon, Jay. Let's discuss a couple of stocks. I believe some of those underperformers which have recovered from the lows, you have a view on them. RBL Bank, Vocart. Give us your view and levels you're looking at.
Yeah, see, Vocard is pretty interesting because the Nifty Pharma Index is also doing pretty well. So as long as the stock is able to hold about 200, I think it has a potential to scale about 280. Like with RBL, it's looking like an incomplete move. So I think it will protect 163, and the momentum is also with the stock. As long as the stock can protect 163, I think new highs around 190 is on the cards. Similarly, AU Small Finance, that's also, an incomplete move. The momentum is with the stock, so possibly pushing towards 800 as long as 730 is protected.
Okay, AU Small Finance headed towards 800, but you need to hold on to 730. There are a few stocks that you're bearish on, Bajaj Finance and Dabur. Can you tell us what the charts, the reason why you're bearish on them?
Yeah, see, Bajaj Finance, has great potential to crack here and might be a target for the bearish traders. It's traded below 6,999 briefly. Right now, it's about just over 7,000. I think as long as it holds below 7,400, it has great potential to go below the 2023 low. So that's the kind of setup there. So very attractive setup there. Let it allow to bounce somewhere close to 7,200. So the risk reward is very attractive. And Dabur needs to trade below 556. Then it will trigger the negative setup there. The FMCG index is starting to see like it can see some profit booking. If you see the FMCG sector, if it starts to trade below 50,500, that will mark a reversal for the sector and can bring in a profit booking. And Dabur is the relative weakest stock within the FMCG names. And although Godfrey Phillips is not within the F&O name, but it's forming a head and shoulder top there. So that might have an impact on ITC. Watch out, ITC shouldn't trade below 430. As long as it trades above 430, it's bullish for the sector and the stock.
Got it. You have a view on the rally and then the pullback we are seeing in the US as well. And I think you're watching. You sent us some levels on FANG Plus. Is there a sub-segment that, and then you gave us a level for the semiconductor index as well. A breach of which perhaps will indicate to you that the market there is also tapering off. What's the view, Ajay?
That's right. The sugar high that the markets have seen from May for the AI-driven rally, that's probably coming to an end. And we have a reversal signature on the semis and the FANG Plus, but we don't have a break of critical support yet. But it's because the markets have been quite strong. Normally I would have taken this as a reversal, but I'm waiting for a break of support. A critical support for the FANG is 34.17, and for the semiconductor is the Philadelphia Semiconductor Index 7212. Intraday break of these levels will mark a reversal for the US rally, and it will probably trigger a very deep correction. So these are critical levels, 7212 and 3417. An intraday break would do, and that will mark a reversal for US equities. If you look at even the Japanese Nikkei, that's got a very clear pullback here. As long as the index stays below 33,200, 33,300, I think that will mark a lower top. And we are just in the days of a couple of days of pullback. And even the stock 600 in the European markets, which has been an outperformer, that's also marking a reversal. We're just waiting for supports to give in. So once that's given, we can declare the up move is done.
Okay, well, Jay, we'll leave it there. Good conversation as always. Thank you very much. And we'll keep an eye on some of those levels that you are talking about. Well, we'll take a quick commercial break here. More market coverage on the other side. There's 9 minutes to go for close. And things are pretty solid through and through with 125 points till pretty much the day's highest point, 18,815. So take that break. We'll be right back.
Welcome back. Coming to the close of the day's trading action, let's get you some opinion. Earlier today, we chatted with Andrew Holland, CEO at Aventus Capital Public Markets Alternate Strategies, to get his view on the markets and the top sectors that he's betting on. Listen in.
Near-term, it's well, I think we're all complacent. To be honest, I think let's I've been, as you know, I've been more constructive on the market. So please, I'm not trying to be overly negative here at the moment. If markets do fall, then I'd be buyer on those dips. But I just feel that markets look globally a bit tired with no real catalyst, and the only real catalyst is either higher rates and slowing growth, as we're seeing in Europe. We've expected this market to be kind of volatile, because of all the different events that we've been seeing, but it hasn't really been, the volatility's not been there. The problem I find on the defense sector, and it's something which doesn't help in terms of valuing companies, is that the orders are very lumpy and you'll never know when they're going to come in. But obviously, my view, this is over the next 2 to 3 years is going to be two sectors which will continue to race ahead, and therefore you need to be involved in some of those stocks, although it's limited on the defense side. I mean, 4 or 5 months ago was obviously the kind of more kind of new age companies, the kind of Paytms of this world, Nikes, but we did some homework on that, and some of them have actually kind of moved ahead quite well.
Well, it's time to wind down then. The weekly expiry has played out for the Nifty Financial Services Index, and what an expiry it's been. Firmly in favor of the bulls. The Nifty Bank as well came to the party. Quietly that one sneaked up, and towards the end of the trading session, given the HDFC boost that we had, the HDFC Limited stock, the HDFC Bank stock as well, they put on good gains, and that's what fired up both the Nifty Bank as well as the Nifty Financial Services Index. We go home with the top gain on the Nifty from the HDFC Group itself. That's HDFC Life, that's up closer around 5%. Apollo Hospitals was up closer around 2.5%. And SBI as well did spike up, more or less flattish, getting into closing bell, but that did perk up in the last few minutes or so. We had Cipla, that was the underperformer today. That was down closer around 1%. Tata Consumer as well goes on with the cut of closer around 1%. And Britannia as well does see a cut of closer around 1%. But make no mistake about it, the final 60 to 90 minutes belong to the HDFC Group. And the reason we go home with hefty gains is because of them itself. HDFC, HDFC Bank and HDFC Life. What else, guys?
Birla Capital also takes top honors in the non-Nifty or in the mid-cap category. Aditya Birla Capital, where they floated a QIP of 1750 crore, was up 6.5%. Other NBFCs, Canfin Homes, Max Financial, Piramal Enterprises, PFC, REC, remember, gave us bold targets. They're planning to increase their AUM to 10 lakh crore by 2030 from the current 4.3 lakh crores, more than doubling over there. PFC moved up. Pharma continues with its outperformance. So you had Alembic Pharma, pull up something like a Metropolis. Metropolis was up close to about 5% on very large volumes. On the losing side, BEL came in for some correction. Indus Stars was a bit subdued in trade. SRF, Dalmia Bharat, HPCL. We've seen a bit of a decline in crude prices. Brent was hovering around 74.5, but right now Brent crude prices are at 73.2 against the dollar. So BDL too slipped close to about 1%. Well,
Rima, I think, if global cues are supportive and things look good overnight, when we come back tomorrow, it's possible that we are again talking about new highs on the Nifty.
And it's also expiry tomorrow.
Yeah. So 1 point away, at the high last week, but let's see if you're able to regain that. Just a few more names before we kind of wrap this up. Landmark is a company we were talking about with regards to those blocks. The stock sold off yesterday, but it came right back. That's up about 5% today. These the electronic manufacturers, right? Sirma, take a look at that. Big gains today. There was this note from, I think, Spark Evendus, basically, which highlighted, they initiated coverage. Look at something like a Canfin, which is looking good. Green Panel, Nimesh highlighted that DAM Capital has initiated coverage, and there is some HNI interest as well. And of course, I think as we mentioned, Metropolis and AB Capital, etc., were some of the other gainers that we had as far as gains are concerned. So once again, looking good for the market. 5-Star, Barbecue and Mapma India, perhaps three names which I can spot which sold off on decent volumes, but nothing dramatic at all. These stocks came off between 2 and 4% or so. So those are the three names that I could spot. But on the gaining side, the list is much, much longer. But that's the close for you. The market ends on the Nifty with a 128-point gain. 18,819 is where we're at. From all of us here, thanks very much for watching. Don't go anywhere. Our Tuesday special, Commodity Champions, is coming up next.